Next, I'm going to introduce my group members. The first one is Daphne Vincentius. The second one is Amira Patricia binti Muhammad Darwis. The third one is Mashita Ilya Imani binti Muhammad. And the last one is Tania Amiga Anak Simon.
Before I start, let me introduce myself. My name is Mashita Ilya Imani, and today I will be presenting on investment appraisal, which is the process of evaluating whether long-term investment projects are worth undertaking. It helps management decide whether to accept or reject projects such as buying new machinery, expanding operation, or replacing old equipment, which usually involve large amount of money and long-term benefit. The purpose of investment appraisal is to ensure investments are profitable, compare different options, use limited resources efficiently, and maximize shareholder wealth. Since this project involves risk and uncertainty, companies estimate future cash flow and apply various appraisal methods, including the payback period, accounting rate of return, net present value, and internal rate of return. The payback period focuses on how quickly the initial investment is recovered. ARR measure accounting profit, while NPV and IRR consider the time value of money. Overall, investment appraisal improve decision making, reduce financial risk, and support long-term business success.
My analysis covered three main parts. The first one is net initial outlay, the second one is annual differential cash flow, and the third one is terminal cash flow. First, we calculate the net initial outlay, which represent the total cash required at the beginning of the project. The cost of the new machine is 1,255,000. We add the custom duty of 55,600 ringgit and transportation on cost of 20,450. This gives us a total machine cost of 1,331,050 ringgit. Next, we include additional costs, training cost of 12,000 ringgit, increase in working capital of 15,000 ringgit. So the total initial investment become 1,358,050 ringgit. We then deduct the inflows related to the old machine. The old machine is sold for 350,000 ringgit. From working one, the net book value of the old machine is 450,000, resulting in a loss on disposal of 100,000 ringgit. This loss creates a tax saving of 26% times 100,000, equal to 26,000. Total inflows therefore are sales proceeds, which is 350,000 ringgit, tax saving, which is 26,000 ringgit. After deducting these inflows from the total investment, the net initial outlay is 1,358,050 ringgit minus 350,000 ringgit minus 26,000 ringgit, equal to 324,000 ringgit. For the annual differential cash flow for year 1 until year 8, we calculate the annual differential cash flow, which measures the yearly benefit of the new machine. Compared to the old one, sales increase from 1,890,000 to 2,500,000, giving an increase of 610,000. Overhead increased by 330,000, which is deducted. Defect cost decreased from 50,000 to 20,000, resulting in savings of 30,000. Depreciation working 2. The old machine depreciation is 50,000 ringgit per year. The new machine depreciation is 155,943 ringgit and 75 cents per year. So the increase in depreciation is 105,943 ringgit and 75 cents, which is deducted when calculating profit. After accounting for all operating changes and depreciation, the profit before tax is 204,056 ringgit and 25 cents. Tax at 26% amounts to 53,054 ringgit 63 cents. Therefore, the profit after tax is 151,001 ringgit and 62 cents. To arrive at the cash flow, we add back depreciation, which is 151,001 ringgit and 62 cents plus 105,943 ringgit and 75 cents, equal to 256,945 ringgit and 37 cents. This amount represents the annual after-tax differential cash flow from year 1 to year 8. Finally, we calculate the terminal cash flow at the end of the project. The new machine has a salvage value of 90,000 ringgit. The increase in working capital of 15,000 ringgit is recovered at the end of the project. Therefore, the terminal cash flow is 90,000 ringgit plus 15,000 ringgit, equal to 105,000 ringgit. Thank you, that's all for me.
Now, let me continue by explaining the payback period. So, payback period basically how fast we get our money back. The machine costs 325,000 ringgit and generates 256,945 ringgit 37 cents per year. This gives a payback period of 1.26 years. This means the company recover its investment in just over 1 year, which is very fast compared to its 8 years lifespan. So the risk is low and cash is recovered quickly. Next is net present value, which tells us if the project is worth it today. Using an 18% discount rate over 8 years, the present value of cash inflow is 1,047,720 ringgit 44 cents. After subtracting the initial cost, the NPV is 723,720 ringgit 44 cents. A positive NPV means the project adds value and increases shareholders' wealth. So, should the company buy the new machine? Based on our analysis, the answer is clearly yes, because the payback period is only 1.26 years, which is very short. The NPV is positive and large at 723,720 ringgit 44 cents. The new machine increased sales, reduced defect costs, and improved efficiency. Overall, the project generates strong cash flow and low financial risk. Therefore, this investment is not just profitable, it is value-creating, financially sound, and beneficial in the long run.
Hello, I'm Daphne Vincentius, and I will be talking about the article that we have reviewed. This article is titled Financial Literacy, the Impact on the Profitability of SMEs in Kuching. It was written by Shafina Rahim and Vinod Rajbalan. The study focuses on small and medium enterprises in Kuching, Sarawak. And the main purpose of this article is to examine how the financial knowledge, financial behavior, and financial attitude of SME owners affect their business profitability. The authors want to understand whether better financial understanding can help SMEs make better decisions and improve their business performance. According to the article, SME stands for Small and Medium Enterprise. It refers to a business that operates on a small or medium level. These businesses usually have fewer employees, lower capital, and mainly serve local or regional customers. In Malaysia, SME can be found in many sectors such as retail, food and beverage, manufacturing, and services. The main objective of SMEs is to generate profit and grow the business. They also aim to create jobs, opportunities, and support the country's economy. Besides that, SMEs want to improve the quality of their products and services and expand into new markets and ensure that their business can survive in the long term. There's many issues from this article, but in this presentation, we will only be discussing on the two main issues from this article. The first issue is about low financial knowledge among SME owners. Many business owners do not fully understand basic financial concepts such as managing cash flow, understanding risk and return, and knowing the real cost of borrowing money. Some also do not understand the time value of money, which means they do not consider how money today is more valuable than money in the future. Because of this, they may make poor investment decisions, choose expensive loans, or fail to plan properly. As a result, their business profits can be lower and the risk of failure becomes higher.
Thanks to my friend. My name is Tania Amiga Anak Simon, number matrix 2023167 and 107. So the second issue is weak financial behavior. This means that many SME owners do not manage their money properly. Some do not prepare a clear budget or plan their business finance. Others do not manage their debts well, such as paying loans or credit late. Many also keep poor financial records or only record transactions manually. Because of this, they may not know their real profit or loss. This can cause cash flow problems and make it difficult for them to get loans from banks or investors. So, in conclusion, small and medium enterprise or SMEs play a crucial role in driving economic growth. fostering innovation, and creating job opportunity. By using effective investment appraisal processes, they can make informed decisions, manage risks, and evaluate project with confidence when strong operational practices are combined with careful planning. SME can boost productivity, improve efficiency, and strengthen their competitiveness. Ultimately, this strategy enable SME to achieve sustainable growth, adapt to challenges, and make meaningful contribution to the economy. So that's all from our group. Thank you, madam, for listening, and goodbye.